Hey everyone, welcome to another YouTube live video. This time we're going to be talking about how you can take advantage and max out your Roth Solo 401k. And yes, you still have time for the 21 taxable year. Yeah, if you are an S Corp or a partnership, you have until September 15th, 2022 to file your tax return, including extension. And if you are a sole proprietor, single member LLC, C Corp, you have until October 15th. So there's still time. And if you have some extra cash lying around, you need to watch this so you can take advantage and dump more money into your Roth Solo 401k. Yeah, extra money that you may want to invest in a taxable savings account. Well, no. You should be investing it in a Roth account. So all the income and gains from that account will be tax-free. Yeah. Whatever you buy or sell, no tax. And so long as you're over 59 and a half and your Roth's been open at least 5 years, you're good to go. It's all tax-free. So I want to spend a few minutes today just talking about what a backdoor Roth IRA is, even though I spoke at length about that last week. Then I want to talk about the Mega Backdoor Roth Solo 401k, how it differs. And I want to then focus on the advantages and some of the tax strategies you can implement to max out the Roth Solo 401k and take some extra taxable money that's lying around, maybe in your bank account, and dump it into a Roth plan and generate and shelter all the gains from tax, which as a tax lawyer, that is the ultimate goal, right? I remember one of the first things I learned in law school, Federal Income Tax 1, it's the first tax class I ever took. Professor said a good lawyer wants to help his clients defer tax, push it down the road. A great lawyer wants to find out a way how to eliminate the tax if possible. And the Roth IRA or the Roth 401k is the best legal tax shelter out there to eliminate tax on assets. So real quick, the backdoor Roth IRA is essentially utilized by taxpayers that make more than $214,000 married, filed jointly, $144,000 single, who make too much money to do a Roth. So since 2010, there's no income limitations for conversions, meaning anyone can do a Roth conversion. So if you're Elon Musk or Warren Buffett, you make $1 gazillion this year, still want to do a Roth, all you need to do is a backdoor Roth IRA, which means you just do an after-tax IRA contribution, $6,000 or $7,000 if you're over 50, and you just immediately convert it to Roth. And since it's after tax, you already pay tax on that money. There's no tax again when you convert it to Roth. Limitation is $6,000 or $7,000. Other limitation is if you have other pre-tax IRA accounts out there, there may be a pro rata limitation on how much that after-tax amount can be converted to Roth. It's something to keep in mind. I went through it in detail last week. So if you're interested, check out that video. And I go through step-by-step how you actually do a backdoor Roth IRA. The Mega Backdoor, as the name suggests, it's mega. It's big time. 10 times the amount of a backdoor Roth IRA. So what are the requirements? Number one, you need a 401k. Mega backdoors do not work in IRA, SEP, Simples. They work in 401ks. And on top of that, you basically need a solo 401k. Why? Because if you work at Tesla or IRA Financial or Google or Apple, lots of employees in that plan, the Mega Backdoor will require the company to satisfy certain ERISA tests, i.e. top heavy. Top heavy test means that the highly comps, the executives, don't benefit too much in the plan vis-a-vis or compared to the rank and file employees. Okay, so that's one test. There's another test called ADP, which is a deferral percentage. Another test called ACP, which is a contribution percentage. Meaning when you have an ERISA plan, you have to satisfy those tests. You can do a safe harbor plan, which will get you around a bunch of ERISA tests. But if you still want to do a Mega Backdoor, which I'll get into what exactly that is in a second, you got to satisfy the top heavy test. And unfortunately, a lot of large plans will fail the top heavy test because not enough rank and file employees will engage in a backdoor Roth strategy. Okay. And I actually have a friend who, this is legit, worked at a big company. He did a mega backdoor a couple of years ago. And they told him at the beginning of the following year that, hey, we got to send you back the money because we can't pass the top heavy test. So we're not allowed to offer the backdoor. And, it kind of sucked for him. So the beauty of a solo plan is a solo 401k is not subject to ERISA. It's no ADP, no top heavy, no ACP test, no safe harbor stuff. It's easy, just you and other owners or your spouses. So ERISA doesn't apply because there's no non-owner employees. So what exactly is a mega backdoor Roth? And spent the last 5 minutes explaining backdoor Roth IRA and some of the plan testing requirements to be able to offer the mega backdoor. But as the name suggests, it is essentially the same as the backdoor Roth IRA, but allows you to put in after tax to Roth up to, for 21, 58,000 if you're under 50, 64,500 if you're over 50, 2022, 61 or 67.5 if you're over 50. So essentially allows you to go dollar to dollar up to the 415 limit. That's the limitation I just mentioned, without having to worry about profit sharing percentages or the employee deferral limitation. So let me just explain to you here. There's essentially several buckets of contribution options, right? There's the employee deferral, and then there's the profit sharing. Okay, the employee deferral is 19,500 or 26,000 if you're over 50 for 2021, and 20,500 or 27,000 if you're over 50 in 2022. And then the profit sharing is 20% of your comp if you're a single member LLC, sole proprietor, 25% of your W-2 if you're a C or S corp. And when you add the employee deferral, which is subject to the 402 limit, the 20,500 or 27 in 2022, and you add that profit sharing, you can't go above the 415 limit I mentioned, of 58 or 64,500 if you're over 50, and the 61 or 67,500 if you're over 50 in 2022. However, the after tax to Roth, that's in this middle section. And if anyone watches or is watching Stranger Things or have watched Stranger Things, which is on Netflix, which my kids love, it's kind of a sci-fi Netflix series, pretty cool. They have this in-between world where the characters go between worlds. And that's kind of a really good analogy for how the after tax to the backdoor works, because it's not employee deferral, it's not profit sharing, but it's still part of the plan. Yes, your plan has to offer it, but it allows you to go dollar for dollar up to the 415 limit without having to worry about employee deferral limitations or the 20 or 25% profit sharing. Okay, as long as you don't go over the 61 or 67.5 or the 58 or 64.5 in 2021, you can do it. Okay, so what does that mean? So what's the strategy? What's the play? The play is, hey, you got some extra cash lying around. Let's say you're a sole proprietor. Let's say you made 100K. Okay, and let's say we're talking 2021. You're under 50. You can do 19,500 plus 20% as a profit sharing of the 100K. That's 39.5. Okay, we know the 415 limit is 58,000. Okay, so we said 19.5 plus 20% of 100, that's 39.5. We know you have up to 58K. So let's say another, $18,500. And let's say you have that line around, right? You had a great year and it's in a taxable savings account, right? A Wells Fargo, Capital One, and you're planning on opening a brokerage account to invest and buy stocks. Okay. Now, that's fine. That's cool. You should save. It's great. I'm happy you're investing. But we all know when you buy stocks with taxable money, you're going to pay tax on the gains. When you sell the stock and you hold it less than 12 months, that's subject to ordinary income tax. That's known as short-term capital gains. You hold it more than 12 months, that is subject to long-term capital gains, which is generally around 15%. But if you bought those securities in a Roth, let's say you took that 18 grand or the 15 grand or the 10 grand, you got some money lying around, and you did an after-tax contribution into this bucket, and then you immediately convert it to Roth, and there's no pro rata formula, unlike a backdoor Roth IRA, where I talked about you have to look at your other pre-tax IRAs and only a percentage can go Roth. No, in the mega backdoor world, you don't have to deal with any pro rata formula. So you can have 19.5 here, you can have 20K here, all pre-tax. You can still do an after-tax and then convert it to Roth up to that 415 limit of the 58 or 64.5 in 21, or the 61 or 67.5 number in 2022. So that means instead of buying Tesla or Apple or Google stock in a taxable account and paying capital gains tax, you can just do it in a Roth and never pay tax on the gains. Now, obviously, the play is you got to be patient, right? In order to take advantage of the Roth, you got to be over 59.5. And the Roth's got to be open at least 5 years, and then you can take a distribution and never pay tax on that income. Okay, so the whole play is, hey, I got money lying around, whether it's 21 or 22. I already hit my employee deferral limit. I already hit the profit sharing limit. I want to play with this money. I'd rather invest it in a taxable account, in a tax deferred tax-free account than a taxable account, so I don't have to pay any tax, which makes a lot of sense. And here's the strategy to do it. So instead of just opening a brokerage account at Robinhood and opening a taxable account and paying tax on all your gains, just do it through a backdoor Roth and buy the same stocks in a Roth and never pay tax on the gains and take advantage of the power of compounding returns. That's the play. Now, you can take it a step further. You can say, I don't want to do employee deferrals. I don't want to do profit sharing. I made 75, 80 grand last year and I'm under 50 in 21. I'm going to put the full 58 in. Or I'm over 50, I'm going to put the full 64.5 in. Now, imagine you did that for 5, 6, 7 years. You're going to have millions when you retire. And you can do it for 21, you can do it for 22, going forward. So you can mix and match, right? The only thing, remember, you can't go above the 415 limit. That is the one thing you got to keep in mind. You cannot go above the 415 limit. You're not subject to the employee deferral 402 limit, which is cool, but you are subject to the 415 limit. Okay, so just keep that in mind. So again, if you made 100K or sole proprietor over 50, in 22 you can do 27K plus 20% of the 100K, that's 47. But we know the 415 limit is 61, so you have another 14 or so thousand bucks to play around with. And instead of just buying stocks in a taxable account, you can do it in a backdoor Roth. So how does it work? Step by step, how does it work? It's super simple. Okay, just like a backdoor Roth IRA, all you need to do is make a after-tax IRA, actually having 3 separate bank accounts for your solo plan. If you're a client of IRA Financial, our plans obviously allow for the Mega Backdoor. I suggest opening 3 sub-accounts. There's no charge. We can do this for you, Capital One. There's no fees. Don't worry about it. You have a pre-tax account, you have a Roth account or an after-tax account, and then a Roth account. Okay, so that's the easiest way to do it. So if you're a client of IRA Financial, I suggest you have your solo up here, okay? And then you have a pre-tax account, okay? You have a after-tax account, and you have a Roth account. 3 bank accounts. Gonna make your life a lot easier, okay? Why? Because you don't have to keep track of where all the money is. You can make contributions to the pre-tax, make contributions to the after-tax, and make contributions to the Roth, much cleaner from an accounting standpoint. So let's say you put 10,000 bucks in the after tax, you can show the money going after tax to Roth, right? Super clean, great for audit trails. If the IRS ever looks, super easy. Okay, no tax when you go after tax to Roth, just like the backdoor Roth IRA. The strategy really only started to be used in 2014. Why? There was a notice in 2014-54 that basically said, hey, you can do a conversion of after tax to Roth, and you don't have to do it pro rata, like the issue we had with the backdoor Roth IRA, which causes a lot of confusion, where you have to figure out exactly what percentage of the after tax could be Roth compared to other pre-tax account. They got rid of that. So number one, they made the conversion of after tax to Roth super easy. And on top of that, guess what they did? They even said you can move it to a Roth IRA. And if you've watched my videos before, you know you need a planned triggering event to move money out of a retirement 401k account. Generally, the triggering event is you got to be over the age of 59 and a half. You got to leave your job. So here, not only can you go after tax to Roth, dollar for dollar, 61 or 67,500 if you're over 50, or 58 or 64.5 in 2021, they'll also allow you to move it to a Roth IRA. So you actually don't even have to keep it in the Roth 401k. Why is that an advantage? Well, IRAs have more investment options generally. So some people like to do that. You don't have to. You can keep it in the plan. But what's going on here is you have a lot of things at work. You have the ability to go dollar for dollar. If you're a Roth lover like me, I wrote a book, God We Trust and Roth We Prosper. All my accounts are in Roth. I'm a huge Roth lover. Why? Because I'm a patient guy. I will trust the process. I believe in the retirement system. So I'm 47 now. I'm going to wait 12, 13 years, and I'm going to have tons of money in Roth, millions in Roth. Why? Because I max out every year. Since I've been a lawyer, 21 years ago, I've maxed out my 401k every year. I've over time converted everything to Roth. And I've had some good investments, some bad ones, but I've done decently well. And I plan on continuing to max out. So it's all going to be Roth so long as I'm 59 and a half. The Roth's been open at least 5 years. It's all tax free. So I'm super stoked about that. And you should too. This is super important stuff. They don't teach this in college. They don't even teach this in law school. I have a master's in tax law from NYU. They even teach it there. I was a 9th-year tax associate at some of the largest law firms in the country, in the world actually. Never knew it there either, okay? I had to get lucky and have a client get me into this self-directed world for me to understand the power of the retirement system. So I'm telling you, I'm educating you, you can make a huge difference in your life, not just for you, but for your family and their family. Seriously, generational wealth just by doing mega backdoors. So you got to have a solo, right? If you work at Tesla or IRA Financial, you're probably not going to be able to do a mega. All you're going to be able to do is an employee deferral, and maybe they'll give you a 3 or 4% safe harbor match. Okay, not bad. You should still max out your 401k. You can still generate millions of dollars when you retire in a tax deferred or tax free account by simply just maxing out, right? The 19.5, the 21,000, whatever it is, whatever you can do by maxing that out. Over time, you're going to take advantage of compounding returns and do really well for yourself and your family. But if you have the ability through a solo K to do a mega backdoor, you should consider it. Why? Because it's dollar for dollar. So let's say you made $40,000 last year. Okay. You can employ deferral, which is great. And you can do that in pre-tax or Roth. So the after tax may not help you that much, right? If you made $40,000, realistically, you're not going to be able to put $35,000 in a 401k. It could happen, right? Let's say this is a side gig. That could be an option, right? So let's say you make 150 grand as an executive somewhere, and you have a side gig, you make 40 G's, you have a solo 401k. You can't do an employee deferral. Why? Because you maxed out at your employer. You can do the after tax. As long as you don't hit that 415 limit, right? You don't go past the 67.5 or the 61,000, you're good. So let's say you did 20,500 in 2022 at your job, and now you earn 40,000 to the solo. You can do almost, let's say 36,000 in after tax and convert it to Roth. Now there's no tax deduction, but instead of investing that money in a taxable account and buying Tesla or real estate or cryptos, just do it in the after tax to Roth. That's what I'm trying to get. Take advantage, use the tax code to your benefit. The code is literally rigged in our favor in the case of a Roth. These rules are out there. The IRS tried to clamp down on the mega backdoor in the Build Back Better bill last fall, 2021. Thank God it didn't pass. So these strategies are still out there, okay? Hopefully they'll be out there for the next 10 years, but who knows? It's still legal. So take advantage of it. Whether you are going to max out the 61 or the 67.5 or the 58 or 64.5 from last year, even if this is a side gig and you have a full-time job and you are contributing to the 401k, through the solo K, you can still go up to that 415 limit and go after tax to Roth. No tax deduction, but so long as you're patient, you believe in what you're doing, and you can wait till you're 59 and a half, the Roth's been open at least 5 years, it's all tax-free. Okay, so the mega backdoor is mega. It's a mega tax strategy. It's one of the greatest Roth strategies out there. I'm a big defined benefit cash balance plan advocate. Depending on your age, you can put $200,000-$300,000 away, but it's pre-tax. You'll get deductions, which is awesome. But if you're a Roth lover, which again I am, I'm all in on Roth. Then the Mega Backdoor doesn't get better than that. It's the ultimate. It's the Super Bowl of retirement accounts, right? It's it. You can't do better. So you can go 58. There's still time for 2021. Whether it's September 15th, your deadline, or October 15th, your sole proprietor, single member LC, C Corp, W-2, still time to do the Mega Backdoor. September 15th, we're getting tight, right? Post-date that check, set up the plan quick. If you already have a plan, get that check in. But again, money on the side, you got money that you can play around with. As long as you don't go above that 415 limit of 58 or 64,500 or the 67,500 in 2022, you're good to go. Okay, you can take advantage of the Mega Backdoor. You don't have to do all after-tax to Roth. You can mix and match, right? Example, again, you made 100K. Let's say you are a sole proprietor under 50. You can do, let's go 2022, keep it simple, 20,500 plus 20% of 100, giving you 40,500. We know the 415 limit is 61. So you can do another, 20,000 or so in the Mega Backdoor after tax to Roth. So essentially, if you're going to invest those funds anyways in a brokerage account, then just do it in a Roth. Why the heck wouldn't you do it in a Roth so you wouldn't pay any capital gains tax, short-term or long-term, where you would in a taxable account? That's the point. The money's there. You might as well just invest it through the Roth. And the Mega Backdoor is super attractive. Now, not all plans allow for it. If you get a free plan at Schwab or TD Ameritrade or Merrill, they're not going to have this option. They're probably not even going to have Roth options. They're just going to give you a run-of-the-mill plan because all they want to do is make money on your investments. If you go to IRA Financial, we don't make money on your investments. We're not a financial advisor. We don't sell investments. We're not a brokerage firm. We're a plan document expert firm. We are IRA experts, 401k experts. It's in our name. That's what we do. And we make money on the establishment and the admin of these plans. Okay. So by using an open architecture IRA Financial Solo plan, you can do employee deferrals, profit sharing. You can also do that upside down middle world of after tax to Roth, which works a lot like the Backdoor Roth IRA, except you can go 10 times higher. You have no pro rata limitations, and you can actually even move the money out of the plan to a Roth IRA. So you can still do it in 22 for 21 year. Even if you don't have a plan, you can set up the plan and technically still do it for 21. But again, September 15th is the deadline. If you have a partnership or S Corp, October 15th, if you're a sole proprietor, single member LC or C Corp. So in that context, you have a little bit more time. So you can see I'm super excited about this topic. We're leaving millions of dollars on the table. It's just the truth. It's sad, but it's the truth. Not $1 million today, but if you look at over the next 10 to 20 years, just adding $15,000 of after-tax money that you're going to invest anyways and dumping it into a Mega Backdoor Roth will lead to millions of dollars in tax-free income for you and your family down the road. Like it's a guarantee, honestly. I can't tell you what to invest in, but if you can average between 7 and 10%, you're going to hit the millions. And it's generational wealth, not just for you, but for your kids. And it's a great everlasting legacy. So something I'm super passionate about. Again, the system is rigged in our favor. Just people don't know about it, right? People don't even know about the Backdoor Roth IRA, let alone the Mega Backdoor. So a couple things to remember. You got to be self-employed. If you work at a large company, they're generally not going to offer the Mega Backdoor because it's going to fail the top-heavy ERISA test. But you can set up a solo plan if you have a side gig. You don't need to have a Google. It could be you're a math tutor, or you sell shoes on eBay, or artwork on Etsy, or you are Santa Claus at a local mall. Anything that generates 1099 Schedule C income, or for your S Corp or C Corp business, is fair game. Just remember, you can't go above that 415 limit, but you don't have to worry about the 402 limit, which is the 19.5 or the 26, or the 20,500 or 27 if you're over 50 in 2022. All you need to be worried about is that 58 or 64.5 or 61 or 67,500 in 2022. Okay, so the mega backdoor, you don't have to go all or none. You can say, hey, I'm going to do some employee deferrals, I'm going to do some profit sharing, and then I'm going to do some mega backdoor, or you can do all mega backdoor, whatever you want. Just don't go above the 415. Remember, not all plans have it, so you want to check out a plan that definitely offers it. But hey, just think about this. For the next 5, 7, 10 years, if you can dump an extra 10, 12, 15 grand into your after-tax Roth account, that money is going to grow without tax. And every 8 years, if you average an 8% rate of return through compounding returns, your money should double. So just run the numbers, and you can imagine how much money that you'll have at age of retirement that will all be tax-free. Yeah, tax-free, no tax, no tax. You can pull all the money out to live on, never pay tax. So long as you're 59 and a half and that Roth's been open 5 years, pull it out tax-free. And the beauty of the Solo K is you can invest in stocks, mutual funds, ETFs. You can also do alternative assets like cryptos or real estate or precious metals or private placements or private businesses or hard money loans. There's a lot of cool stuff you can do. So you have control. You have the ability to dictate how you want to save, whether it's through pre-tax, employee deferrals, profit share, or if you're a Roth lover like myself, through the Mega Backdoor Roth strategy. So just remember, you got to be self-employed. You don't have to have $1 billion business. You just need a little bit of income. Even if you have a full-time job, you can still set up a Solo K. And even if you max out at work, you can still do a Solo K and do a mega backdoor up into the 415 limit when you include all your other contributions from your other plans. And instead of just investing those funds, those after-tax funds in a taxable account at a broker, just do it in a Roth through a mega backdoor and use the same brokers, except make it a Roth and never pay tax on any of the gains. So thank you for watching and really appreciate the support. I hope you guys learned something. This mega backdoor is so crucial. It's such a sick and amazing tax strategy. And I just wish more and more people knew about it. It's so underrated and underappreciated. It's ridiculous. I mean, it's hard to believe how many self-employed people out there, because it's funny. This is the last thing I'm going to say, because sometimes I can go off on a tangent on this stuff. But 25 years ago, actually before 2001, before Extra, you were probably in a better position if you worked at a big company, right? There was no Obamacare. You're able to put away more in a 401k. You've probably got a safe harbor match. You're probably in a better spot. There were no employee deferrals and SEPs or solos before 01. So you'd probably be able to put away a lot more in a company plan, plus get the match. 2001 comes along, Extra basically adds employee deferrals that 20,500 or 27, plus the profit sharing, adds a Roth component, adds the loan feature. So now the solos exceeds the value and benefit of the regular 401k. Now add the mega backdoor to it, add Obamacare, and now you can be self-employed, part of the gig economy, have healthcare, have an amazing retirement plan, better than a retirement plan at Google or Apple or any Fortune 500 company, have hopefully freedom, work on your own schedule, and be happy, because not only do you get to control your own destiny, you get an unbelievable retirement plan with amazing benefits that can't be duplicated in a work 401k, i.e. the mega backdoor, profit sharing, and you also hopefully have healthcare, so you can basically be your own boss. So thank you again for watching. Really appreciate it. If you're interested in learning more, check out our website. I've done a bunch of blogs on this, obviously different videos, or give us a call, 800-472-646. We have a really smart team of tax professionals standing by. And yeah, we want you to call us. We actually have a phone number on our website, and we like talking to people, unlike a lot of other companies now that literally rip their phone number off their website. So giant companies that don't even want to talk to you, which is crazy. But we'd love to help you. So call us, even if you have a plan with another company or just have questions. No worries. We got a great, smart team who I'm sure will be able to answer your questions and help you out. So thanks again for watching, and have a wonderful, wonderful, wonderful day.